Well, markets holding with a gain of around 20 points. But let's talk about the stock that's up 20%. Specialty Restaurants, that stock is up close to around 20% on the back of a stellar Q3. Revenues jumped up 24%. Margins as well came in at around 12.5%. To discuss that and more, we have Mr. Anjan Chatterjee, the CMD of the company, who joins in. Hi, Mr. Chatterjee. Congratulations on a strong quarter. We were talking about a slowdown in the festive season and in the past quarter. Well, it seems a lot of people were visiting your restaurant, so that's good news. Good to see a bit of a turnaround in Q3. The big question is this sustainable? And what did you do right this time around?
See, after the GST input withdrawal, IST, that the input credit has been in withdrawal, there's been a complete shock to us because that's not something which is natural and normal, pre-GST now. And we had to go back. You see, when you have a crisis, you go back to your, the cockpit, the pilot goes back to the cockpit to work very hard. So we went to all line items and cut everything in terms of flab. Every side of the costs were revisited. We started renegotiating because we were paying an 18% extra. That's one of the biggest things. Delivery has been 50%, almost 48% jump on deliveries. We got a vertical of deliveries. Then, as you know, we are a bar and restaurant. We are a restaurant and bar, sorry. So my son Avik, who's come in, so he's 26-year-old. So he's been concentrating on the wet-led ones, Hoppy Polas of the world, and then we're going to be having two more formats on the wet-led ones. So I'm saying that whichever way we can go, delivery one button had to be pressed, and then also another support which is coming from the tailwind of the season. And I can tell you, I've been saying this for a long time, that we are a long-term player. We knew we are a debt-free company. We don't need any money to be borrowed. It was just an organizational, restructure. And if today we had the input with the honorable, finance minister helping us, we would have got, this result would have been at least 40% more. So that apart, I think these are the ones which I mean, I'm sure that there are many big companies who have gone through patches, but I am very confident of the fact that going forward, we should be holding these. The learnings will have to be repeated, and we have a top team. There's a huge change in that. We've got fresh, new, young people. So this is what everybody does when you have crisis. Absolutely. So we've been able to, do that, and inshallah, we will be able to sustain.
Absolutely. Mr. Chatterjee, you're mentioning that your son has come on board, 26-year-old, looks like he's converting it from a restaurant bar to a bar restaurant. So, that will be seen and how that impacts your numbers. But importantly, you said that there's a 45-50% jump in deliveries. That's a small portion of your business, right? How much comes in from there as a percentage of your total revenues?
Yeah. At the moment, it's only 8%.
Okay.
So, frankly speaking, in the beginning years, we used to ignore it. Slowly, we are building it up. We've got a vertical head from a logistics company, which has been food-related, I don't want to name. But then from there, and then we've got this vertical, we're focusing. And if everything goes well, we should be looking forward to an association with a company, which I don't want to name, to do their cloud kitchens. We are the largest Chinese and Pan-Asian chain in India, and we are in 22 or 24
Anjan, allow me to interrupt you there.
Kitchen capacity.
Cloud kitchen, this marries very closely with future consumers' business or future groups' intent to get into cloud kitchen. Is that the company that you're talking about?
Yes.
All right, fair point.
No, not at all. Because you see, we have to get married to a logistics company. Simple, because kitchens are there, food is there. We don't need to get into setting up kitchens. We have ready-made kitchens. We have to optimize, and it'll be asset sweating.
All right.
Sweating of the assets.
Okay, so you spoke about the contribution to your revenue being from deliveries about 8%, can increase further. But let's talk about your revenue mix itself. You said you're moving from a restaurant and bar company to a bar and restaurant company. The last time you spoke to us, nearly half your revenue...
No, sorry. I mean, no. Yeah, sorry to interrupt. It is, you see, we've been a restaurant and bar company. We are adding the bar and restaurant as another vertical.
Okay.
So we go see restaurant and bar will never go out of fashion because there's a humongous amount of people.
So give us the breakup then, Anjan, in that case.
Great and loyal people.
Give us the breakup then. Last time you said about half your revenue came from...
I can give you a breakup. No, not really, not half. I will tell you, at the moment, the wet-led ones will be having around a percentage of around, I think, 18%. 14 to 18%, which is growing. In the next year, we're going to be pressing the button to look at opportunities to scale up Hoppy Pola and also add another brand to the vertical of wet-led. So they are going to be parallel verticals, so you can't ignore the millennial today. So you will have to go balance-wise. And I think that these are the two things which the son hopefully will be leading, the young team, and the father continues to sell mainly in China Chinese.
All right, very quickly, you've done a 17% growth for the first 9 months. I'm looking at your blended margins. They're at around 5.2%. But this time around, you did margins of more than 10%. By the end of the year, what kind of a revenue number are you looking to end up with? And margins of 10%, can you hold on to that number?
It will be difficult for me to tell you the numbers in advance, but surely we will definitely hold on, inshallah. But there could be a possibility that in the next year, fiscal, we will show you a completely different result and a trajectory which will be much higher than what you're seeing this year, because the work we have done this year is going to pay us double dividends next year.
All right, Anjan, thanks a lot for joining in. Wish you good luck on that. So that's the management of specialty restaurants. You know, the stock price right now is at 97, but it's still lower than its IPO price of 150, which happened in July 2012. The street will definitely be watching out for sustenance of these numbers and whether, you know, the numbers that he speaks about comes by.
Interesting. Couple of managements. DTK Prestige spoke about marriage the other day. We have specialty restaurants as well talking about marriage. So that's a Q Mangalam for you. But on that note, we'll wrap up on Chartbusters. You stay with us. Trading Hour comes up next.